every wealthy person sees assets in a different way than people that are not wealthy. But I think the thing is that in an asset economy, and that's where we are with when you have fiat money as the thing that dictates everything, you have to move fiat into assets. And you have to realize that it's always going to seem expensive. That if I put it into this asset that people want, it will go up in relative value. And I think that's the thing that the wealthiest families in the world have always realized is that there's a finite amount of certain assets and they're always going to diversify into them. And that's how they protect their wealth.
And good afternoon, everyone. Thanks for joining us. I always try to bring you the brightest minds looking into the future so we can bend around the horizon and really see how we can structure our lives to benefit from these changes. A lot of people are terrified of the change, but I think we need to embrace it because there's opportunity in that danger. So I want to bring Collin Plume on here from Noble Gold Investments, because this is what we're seeing right now, the transition. You might call it a golden era. Well, maybe that's just a secretive way to say gold is going to be the base of the new era, as well as many other things here too that might be monetized. As we go through, it's just sort of structuring what could be, what's possible here, and then how can you take advantage of that possibility. And nothing's in stone here. As we move through today, take it for what you will out of the information, use it for your benefit, and also pass this along to others and share so they can get the same message, because it's all about us starting the conversation, finding solutions together. So, Collin, I appreciate you joining me, and I'll just say the floor is yours.
Yeah, no, thank you. Well, first, I would say what you sort of led with, Dave, is really what I talk about in the first chapter of my book is that, with every economy, there's an opportunity. And the opportunity that I talk about in my book, Silver is a New Oil, is I lay out the case for a silver super cycle and why I believe that there's, tremendous opportunity in that market. And I, people say, like, is silver going to replace oil? That's not what the argument of the book is. The argument of the book is that, when they started to really use oil in the late 1800s and they realized the massive amounts of usage and the energy and all the things that oil does today, there was a window of opportunity for people to maximize their potential and their growth. And so I just talk about all the uses because I think a lot of people aren't familiar today with all the different industries that silver really touches. Everything EV, obviously, solar, which, that demand alone, just solar panels alone, is about 15% currently of the silver demand worldwide. And they anticipate that usage will continue to go up as more people are trying to keep their energy costs down. They want solar as an option. And, there's a significant amount of silver in every solar panel. And just diving into each specific industry and then sort of laying out the groundwork of silver and the opportunity. So I think it's pretty exciting to get on with someone like you that really looks at the charts, goes back, 500 years and looks at the history of food production and agriculture. And I think that's the best way to gauge what's going to happen in the next 5, 10, 15 years. Because listen, we can only go based on what we know, and then we have to make some assumptions for the future. And so I think that today we'll dive into some things that we think are going to happen and things that have already happened over the last 12 to 18 months. Gold today, gold and silver both up significantly, but people talk to me about the stock market, and a lot of people don't know that gold, since January last year, gold has outperformed the S&P significantly. Gold is up over 40%. It's up almost 8% this year alone. So there's some pretty amazing opportunities that people sort of forget about. So I think it'll be fun to talk about those things and dive into all the specifics.
Yeah, and if I could mention one thing about cars, these electric vehicles, they come out with a new solid state battery. I think it uses 32 ounces of silver per battery. But then we're already seeing people steal catalytic converters out of cars just for the content, for the metals in there too. So,
yeah.
What kind of extra security or thief proofness, if that's even a word salad there, are we going to have to put together to try to even prevent people from stealing the metals out of these new EVs, because that's a huge target. You got 32 ounces of silver in there, and if it goes well above 100, or if we're 200, or some people, or there's whatever, there's a lot of projections out there. At that point, then what? Then you're moving, your battery's worth, a couple grand, and people are going to be very enticed into trying to get that, especially if we're in a downward spiral in the economy.
Yeah. Yeah. I think it is gonna start to be an issue. And hopefully, you know, uh, the goal is that they make some of these cars much more difficult to break into. They create security around it that make it more of a deterrent. I mean, they can deter people to do so many things in so many areas today with AI and technology. I hope they continue to move that. And I think that that story, what you're saying about silver being in the batteries, reminds me of actually my sort of beginning in the business. Was I had a client that bought junk silver and had, $10,000-$12,000 in junk silver sitting on his counter. And someone came in to rob him and basically stole a bunch of things that were worth significantly less than the silver that he had sitting on the counter. He had, junk silver sitting in a jar, and they were stealing, TVs and all these other things that end up being worth nothing. And over time end up being worth less and less. And they missed the real value, which was just sitting basically in a jar on his kitchen. Is the real value is in the silver that he owns. Yeah, we're finding that silver is being used in so many different industries, and the usage continues to grow. And the mind blowing thing about silver today is the silver to gold ratio is so off. I think we started talking off air and really mentioning about, if you go back during history, we've seen silver to gold ratios at 15 to 1, 18 to 1. Today we're at 91 to 1. So even if gold didn't move up $1, which won't happen, silver going back to 50 to 1 would be sitting in the few $100 range. And today we're sitting at about $32 an ounce spot price for silver. Also, it is a tremendous time to buy the physical metal. A lot of people have been seeing what's going on in London. All these people that have been holding contracts in the London exchange have said, I want my physical gold. They're doing it on the gold side. They're trying to buy gold. They're trying to get their gold out of the exchange. We found out that the London Bullion Exchange had about 10% of the ounces that they were supposed to. And so there's been this massive run on physical gold. And with the tariffs that have been going on, people have been, wanting to get their gold into different places. And so the London Exchange basically had to come out and say, we don't have all the gold that we have contracts for. And everything is supposed to be held 1-to-1, and it wasn't. And so there's been this massive bull run, and it's been all over the news. And the London Exchange is basically like, we're short. We have about 10% of what we're supposed to have. And obviously that created pandemonium, and more people want their gold, and now there's a shortage on these exchanges from London to COMEX. And while this happens, speaking of China, China has created their own physical exchange, and they have said that their exchange is a 1-to-1 exchange, that there's no contracts, that they actually have all their ounces, which is quite interesting and sort of ironic because the London Bullion Exchange and COMEX were set up the exact same way when they got started. And they said the exact same thing. And you can go back and look at it. They're supposed to have ounces 1-to-1. And maybe they did at one point, but now they don't. And so now people are scrambling. And you have these traders that typically would never take possession, but they don't trust that their gold is there. And they're calling in, they're repatriating. They're saying, we need our gold. And so you're seeing this massive bull run, which is not the only reason that the price has gone up, but is definitely played into it, is that traders really believe that a lot of these contracts are not actually backed by any gold. So they're calling to get their gold. And so you're seeing just the price really can start to move, coupled with all the other things that are happening out there. The central banks, over the last few years have buying, well over 1,000 tons of gold. And that's been a massive shift in the last 3 years of central banks buying gold. They're buying tremendous amounts of gold. China in the last quarter last year actually sold a significant amount of their U.S. Treasury bonds, about $22 billion of their U.S. Treasury bonds. They divested that, and then they just went into physical gold. So there's this just new belief that you should just have the actual gold. People are actually finally realizing that, hey, you know what? Maybe COMEX doesn't have as much. Maybe the bullion exchange doesn't have as much. And so they're really deciding to get the real thing and the physical, coupled with the fact that right now premiums on coins and bars are the lowest that they've ever been. I mean, we're selling ounces of gold, ounces of silver at the best prices since I've been in the business for 16 years. So on the, you have this big market, they're struggling, they can't find it. But on our market, we have inventory and we're selling it at the best prices we've had since I've been in the business.
Yeah. So coming back on with that, hey, don't panic. London's out of gold thought there. The gold lease rate on the weekend here, this last weekend was 6.9%, and then silver peaked out at 16%. So
Wow.
can you explain that to us? Because I've had a few people hit me up going, what's this thing about the gold lease rate? Like, can I
Yeah.
lease gold? How do you borrow the gold? Like, what is this
Yeah.
gold lease? How do you even lease out gold is more the question, I guess. But those were the most absurd rates where it went from 0.8% in the morning to 12% by the afternoon. And then the panic set in. And then by the next trading day, it was already up at 16. Those numbers have come off, after the initial panic, but still to reach
Yeah.
those absurd levels from under 1% to over 16 in 2 days. I mean, that's truly unprecedented. So something's definitely broken here. So can
Yeah.
you walk me through that leasing process?
Yeah. I mean, in essence, you're leasing gold and 6%, somewhere in that range, which means you're not even getting the actual gold. You're getting charged a percentage above the gold price to borrow gold. And they've been able to get away with this for a long time, Dave, because it's kind of like if I gave you a candy bar, for instance, and you were like, I don't need I'm not hungry. I don't need the candy bar right now. So you decide like, oh, well, maybe somebody else wants it. So they buy the candy bar and then somebody else sells the and it just keeps getting sold. Well, that's what they've been doing with gold. They've just been selling it. And a lot of the gold in the London Bullion Exchange that's not there was already bought by multiple entities. And so now they're saying, well, we want it, we want to get it. And they're saying, well, if you want it, I'm going to charge you a premium for it. We can lease it out at these rates. And so, yeah, you're paying to get, fractionalized gold. You're leasing against it. Whereas we're selling it, lower than that, the actual physical item. So it's been, and this happens in these big markets. Not only that, the other thing to keep in mind is that you can't, when you look at these traders that want to take physical possession, they can't take like an ounce of gold. They have to take large amounts of gold. Like I've seen anywhere from like, they would require like maybe like 100 kilos of gold for you to take physical possession. Whereas someone with like us, you can buy an ounce or two or five or whatever. So you can buy it in a much smaller form. So in essence, these markets went sideways because of just trust in the market, and they're charging a premium for people to borrow lease gold. And these lease rates are just unbelievable. I've never seen anything like it since I've been in the market. And it really just comes down to is that there's no reason to have a leased market in gold and silver. That's the beauty behind it. It should all be backed by the real thing. And it shows that GLD and a lot of these companies are just, they're just having a fraction of what they say. So every time someone buys it on the exchange and they feel like they own gold, they actually don't. They're just buying a leased gold. And that's no better than having some paper. And it doesn't really give anyone the confidence that they're looking for. The idea behind gold, I mean, I know you're into mining and I know you look at the statistics, like it's all about diversification. Like if you have some miners, junior miners that you believe in and you take a gamble, like that you're betting that miner hopefully finds gold or silver at the right price and they're able to sell it at the right price. But it's a significant gamble. The reason you get into gold or silver is that you're trying to get away from that gamble. You're trying to get into something that you understand and that you hold, and it's supposed to be a safe asset. So the idea that these large corporations are selling a fractionalized version of gold and silver, I think does not give people a lot of comfort. And that's why you're seeing this market really turn upside down. And listen, gold's at its all-time high. There's a reason for it. And all the indicators out there are that we're just at the beginning of this massive bull run, because Inflation report just came out in the US. It's higher. Core inflation's higher. It didn't go down, right? So that's an indicator for gold. That's a reason to buy gold. The 10-year treasury keeps going up. And the reason that's people are like, well, why is a 10-year treasury important to me if it keeps going up? That's a signal. If it keeps going up, it's a signal to the market that even at 4.8%, there's not enough buyers, right? That the bond market believes that the bonds should be in the fives or sixes or sevens, which means if the bond market's at 5 or 6 or 7, where does the price of gold and silver go? Right. So these are things that people, they don't realize when they look at the numbers. They're like, oh, everything's up. I feel good about everything. But yeah, everything's up until they're not. And, and then obviously you have the stock market at an all-time high. But the thing you have to look at that too is that most of the wealth in the stock market is based on growth in 7 companies. You have the Magnificent Seven. You have 7 companies that have really been driving the stock market. It's all been this tech boom. And there's some people out there that think they're inflated, and obviously had DeepSeek, a month or two ago that had a little crack in the armor that let people know that maybe this AI doesn't need to cost as much. Maybe we're overpaying for this AI revolution. So there's a lot of indication out there that the stock market could be in for some trouble this year and have some rough waters.
Yeah, because you look forward at that. You mentioned that word super cycle, like 2008, we also had a super cycle boom where we saw some of these same things happen where there was insane valuations for sets of companies, the year 2000, also .com crisis
Right.
in the
Right.
1990s. I mean, we always get into this same kind of loop again. It's a cycle. And, this whole thing about identifying it through history is cycles. Once you see the same cycle and the same repeat again, it's almost like we're trading now for, middle 1990s or late 1990s with the .com crisis or a crash, wherever you like to term that. Commodities super cycle hit in 2008, and what, silver went up to 45, if I'm correct.
50.
Oh,
50.
50. Okay. Well, then,
Yeah, it went up to 50. And also like the cost of it was a double win for investors. And I'll tell you why, is because it was moving up so fast that there was such a lack of inventory. And we're going to have that again happen because right now there's so much physical demand for physical silver and gold that they're actually, some places are actually getting coins and bars and melting them because there's places that just want the physical raw metal more than they want the coins and the bars. So there's a lot of inventory in these kind of things that are going to come away. They're going to go out of the market. And that's what happened in 2008 to 2011. It was the perfect storm. You had the equity markets fall apart. And then you had, hey, the government's like, we need stimulus. So what do? They did quantitative easing, phase 1, phase 2, and phase 3. And so they just dumped the market full of money. And gold and silver went on a historic run, and silver went from $11 all the way up to $50. And it went. I'm talking my hands almost through my book somewhere. But that's what I'm saying is that these things are going to happen, and history will repeat itself again. I believe that we're going to do another area of money printing in this country. And I think it's going to happen. I think it's going to happen this year because something that I know a lot about is real estate. And right now, real estate is the biggest bubble since 2008. And it's a different bubble because that bubble was on the residential side. This bubble is on the commercial side. And so you have all of this debt that's coming due this year. And people don't even understand the billions and billions and billions of dollars of debt that's going to come due this year. And the banks are in no position to do anything about it. They can't service those loans. They can't take back those properties. They don't want those properties. And so they're doing a classic extend and pretend strategy. They're just saying, we'll extend for another year. But if this continues and the CPI keeps staying up, that means the Fed cannot lower rates fast enough to get rates down. And the problem is, the simple math of it is that a lot of the debt, the commercial debt, office buildings, shopping centers, apartment buildings, industrial, most of those are coming due in the next 12 to 18 months. Those loans originated between 3 and 4%, and they're going to come back to the market between 5.5% and 7%. Those are going to be the current rates based on where the market is today, plus the vacancy in those buildings across the board is anywhere from 10 to 40% higher than where they originally were, right? Because no one's going back in the office. Some people are. It's a small amount. Apartments are having higher vacancy all across the country. Shopping centers, businesses are struggling. You're seeing, I mean, every city you see it. There's vacancy all up and down all your major corridors. So you have a serious problem for banks because what are they going to do? How do they look at this? How do they look at these loans and come back at double the rate? How does the borrower keep up with that? So you have the biggest potential bust that we've ever seen. And how is the government going to deal with that? How are they going to manage this next crisis that we're in? They need cheap money out there. They need to get rates down, and they're going to try to figure out a way to do it. And that's going to even be further of a sign that we're in trouble, because the Fed really has one mandate, and their mandate is to get inflation down to 2%. And inflation actually is going up. It's not going down. So I think that's the other super cycle. That's the other problem. So there'll be tremendous opportunities in real estate. But there's going to be tremendous opportunities in anything that has a limited supply that's in high demand. And I think we're going to go through a 2008 to 2011 situation with gold and silver, because I think they're going to dump money out there. They're going to devalue the dollar, and that's going to be great for the yellow metal and also for silver.
Yeah, coming down to that, 2%, that's theft of your buying power. So again, gold and silver protect against that. The Fed's statements are, we're going to steal 2% of your wealth every single year, and we're going to call it inflation, and you're going to be happy with it because we all agreed that we're going to steal 2%. That's basically what they're telling you. So again,
right,
trying to protect against this runaway inflation, or I should say inflation's, they disguise that word as theft of your buying power,
right,
by mandate from some, private institution. And then again, gold and silver protect against that. And if we're going to get into higher interest rates, that's the only way to go. I mean, really, how are you going to protect those base assets? And you can put them, it's great. Real estate's running in some places, but if they were ever to sell that out of the banks, I mean, the catastrophic, the markdowns, I mean, with Silvergate and everything happening, and the runs on the banks for a tiny little amount of, liquidity that came out of there. We're talking 600, 700 billion in underwater loans there. So I'm wondering if they could convert some of those office properties into indoor agriculture facilities. If food gets to, again, if we're going to see 2008 super cycle, food got really expensive back then too, for all the base commodities, whether it was corn, soy, wheat, whatever it was, all skyrocketed. But again, farm financing, where does that come in? If we're just talking about a full general contagion in the market, our farmers need financing. They don't have financing. They don't grow food. So then we get into this, spin here. Okay, can we do something super high tech, AI, vertical production inside all these disused office buildings for local communities to be able to at least produce food in a local region? I don't know. I'm just spinning something there.
It's a great idea, actually. I mean, I think that, I know, I know a lot of the office owners, and it's a real predicament right now, because, there's buildings that I know about that are 40% vacancy right now, and they can't survive. They can't cover the insurance. They can't cover the bills. They can't cover any, they need. So a lot of the talk has been converting them to residential, which a lot of the cities do need. There are a need for residential, but the astronomical cost to turn a regular office building into a livable space for humans with bathrooms and kitchens and all of those things is through the roof. So there, any way you look at it, there has to be, the government is going to have to step in and either give significant tax advantages or actual funding or money to stimulate those kind of significant changes. And I think the world is changing faster than what the governments and everybody sort of realizes. And I think that everything seems okay right now because, people have been able to stay, but once we see more of these banks, I mean, you remember Silicon Valley Bank and a few of these banks, when these banks went down, people were scared. People were afraid. And we're just talking about a few banks. I think this year there's going to be a major bank that goes down or has some significant problem. I mean, we're talking about a big name. I don't know if it's going to be like a Bank of America type, but someone in that genre is going to have financial problems this year because of all this debt that they're accumulating, and they're going to get loans coming back to them, and they're going to have to make a decision. So, I think, Dave, the thing is, when we look at monetary systems and you look at over time, there's a reason why this fiat system, the way it's currently set up, when you don't back it by something, you just create these, super cycles of boom and bust where there's tremendous debt made in the 1%, and then everyone else really just can't keep up. And that's the big problem with going off a gold standard and not having any backing. And I know President Trump has talked about creating a standard with crypto. Hopefully gold will be a part of that conversation, maybe some silver. But you need to create a system that has some checks and balances so that you don't have these massive booms and busts. And you make it difficult for the government to spend too much. And I think that's the real situation. If you took every problem out of it, you took the banks out of this and that, at the end of the day, we're almost $37 trillion in debt. And that's really tied to the fact that we can just print money out of thin air. And it does lead into inflation. It does. And you're right. They sell you this bill of goods that inflation is okay, and it's not. And it's, and maybe under a normal situation, a 1 or 2% real inflation is okay and it is tolerable. But I think everybody today, now that the cat's out of the bag since COVID, they realize that inflation is probably 10%. It's probably 12%. So when the 10-year treasury is paying you 4.7 or 4.8, it's like, wow, look at these rates that they're paying. But really, the only reason they're paying that is because inflation is much higher. And so they're just trying to pass it on. And the bank's going, yeah, and the government's going, yeah, we'll pay you that 10% because they really know it costs to live. It's going up 8, 10, 12% every year. So 4.7% is it's just not going to get the job done. It's not going to help you keep up with your way of living. And I think that's the thing that I talk about in my book, and I talk about just in precious metals in general, is that you got to have some things that are inflationary to protect yourself, and you need to be able to identify some opportunities. And I think that's the thing that people need to look at, is that I think the most of the money has been made in this cycle in the stock market. I think they've made a lot. There's companies and there's people that are up significantly, but I think that if the stock market pulled back 20, 30, 40% over this year, I think that the indicators after that pullback will have been there. Price Schiller Index, cost of stocks relative to underlying value. If you look at all of those ratios, if you go down the 10 most likely scenarios for stocks, you'll see that most of the ratios show that we've never seen this type of inflation in the stock market. We've never seen these prices relative to earnings. And so these are the opportunities to, take some money off the table and to get into something else, take some money and get into something else. And that's really what the wealthiest people in the world do, is they take their massive gross that they made in an opportunity and some speculation, and then they get it into something safe. And really, Paul Tudor Jones, famous hedge fund billionaire, really talks about that. He made tremendous wealth, and he took that tremendous wealth and he put it into assets that he understands. And last year, and beginning of this year, has just been talking about inflation. He's talking about gold. He's talking about crypto. There's just tremendous opportunities in these areas.
Yeah, you mentioned dynastic wealth pretty much in a nutshell there. So you look at these families, I'm going to go a little woo-woo here maybe, but you look at the shelf life of a reserve currency from the guilder to the pound to now the US dollar, but the same what is considered dynastic wealth families that are around the news, some even unheard of, they're always taking these assets and moving them into a huge amount of gold and silver holdings. But, I was looking at somebody's private collection before, and a lot of it was, Spanish gold from the 1600s. Like, they're never going to be melting that down. That's in their collection, but it counts as gold. There's premiums on it, obviously, but they've held that forward in their family for more than 400 years. The same gold doubloons at mint, perfect condition from the mint at the time. Like, that's just brought forward. It's the same thing. Like, you look at this paper thing, it's almost if these families, again, this is the woo, they have planned these currencies for a certain shelf life. Because when dynastic wealth, you're talking multi generations that are moving forward with these same tangibles in hand, whether it's the real
Right.
estate, whether it's castles, whether it's the artworks, whether it's the gold, the silver, in different forms now that we consider antiques. But how are they the ones that are always bringing this financial behemoth forward with their families through the ups and downs and
Right.
crashes and wipeouts, and then still intact, growing wealth? When a lot of people, simply get wiped out, like you're talking about, a 40%, 50% down in the stock market, and people they just start shaking in fear. They lost everything because they can't retire the way they wanted to, or there's something with their house. They need to sell their house now. It seems that the modern era versus dynastic wealth era, there's some decoupling here, and I do believe it's, again, woo woo, but there's got to be some sort of planning of these families
Well,
that have brought this through for centuries and centuries.
it's all based on assets, and it's an asset economy. And I can tell you this: once I got in the asset business in 2008, I realized that every wealthy person sees assets in a different way than people that are not wealthy. In that they, I've never had a time in the history that I've been in the precious metals business that I didn't have this exact conversation. I was going to buy gold, but it's too expensive right now. I've had that conversation since 2008 when gold was sitting at $700, when I started in the business. And it works like that for every asset that people buy. But yet there are people that realize that there's certain assets that will continue to go up. The other conversation I've always had about gold is it doesn't pay a dividend. Well, let me ask you a question. Right now, in the last 3 years, would you rather had a dividend company that's paying a 2 or 3% or 4% dividend, or would you rather have bought gold January of last year and made 40% more? Right. And so, yes, there's a time and a place. And I believe that you should have some of your pie in some of those things. But I think the thing is that in an asset economy, and that's where we are with when you have fiat money as the thing that dictates everything, you have to move fiat into assets. And you have to realize that it's always going to seem expensive. It's always going to seem like that. And I've had that, I had that conversation in 2008. I had it in 2009. I had that conversation in 2012 when gold pulled back and gold went back to $1,250. And people would say to me, I'm going to wait to buy gold until it goes back to $800. But wealthy people go, no, if you look at the charts, you look at the debt, if you look at the dollar, you look at my money, that if I put it into this asset that people want, it will go up in relative value. And I think that's the thing that the wealthiest families in the world have always realized is that they always move out of paper and they buy assets. Now they do it through debt or sometimes not through debt, but they always have assets that don't have debt. And that's honestly, my favorite thing about owning gold and silver is that it's debt free. You own this, there's no debt behind it, and it's yours. And I think that's the thing that's happening in this economy is that, people that bought it on the exchange, they bought a contract, they realize they actually don't own it. And that's why there's been this massive rush to get the physical gold. Also, there's been this fear of the tariffs, right? That, there's this belief that there's going to be a tariff on gold and silver. That's why a lot of people wanted their gold shipped here to the US. There hasn't been any indication yet that he's going to do a tariff on gold and silver. He did do it on steel and aluminum, depending on which country you're in. So there was that fear also. But overall, I think it's just a rush to actually have the assets that you own by yourself and not have to share it with anybody else.
Yeah, on topic here. That book, how can we get a copy of that book? Silver is the
Yeah,
New Oil.
it's on it to silver is the new oil.com is our website. So you can go there. It's also on Amazon. We have a coupon code if you come to Noble Gold Investments. You call in, you talk to somebody live. We have a code so you can get the book at a discounted rate. Yeah, I'm excited. It's my first stab at a book. It was the book I've wanted to write for 5 years, but I really got started about a year and a half ago to write it, and I think the response has been pretty good so far. People seem to like it.
Yeah, and so I was trying to dive into a little bit of new information that can give you that last, maybe, like you're doing a Rubik's Cube where
Push.
you finally get that last, oh, I got it. It was that last twist, right? That one move,
Right.
and then bam, everything kind of falls into place. because you were mentioning monetization here, and I wanted to go back to I want to bring you back to 1900 here, the Gold Standard Act, and that was McKinley, right? So I'm wondering here, Trump suddenly renames back to Mount McKinley. I mean, is this a
Right.
secret signal there that we are going to be going back to something backed by gold? Because I had a couple numbers here, so if anybody wants to follow along with simple math, so uh, to start here, Treasury Secretary Bessent was telling Trump the day, or it was on Friday, like a few days back, quote, within the next 12 months, we are going to monetize the asset side of the US balance sheet for the American people, and we are going to put these assets to work, unquote.
Hmm.
So when we look at that, I mean, overall, taking a look at the assets that are easily available, I mean, using land, okay, that's one thing, but that's going to take a minute to get anything on there. What's almost an instant conversion? Gold. So I was looking at this and saying, all right, well, 8,500 tons or 8,500 tons of gold is 272 million ounces. And even if we'll bump it up to $3,000, that only brings us to 816 billion, not even a trillion, a little bit under a trillion. But then all the silver that's available in exchanges and all that it could be monetized, 367 million ounces. And at $32, that just 11.7 billion, just under 12 billion. So even adding those two up, you're not even at 1 trillion yet.
Right.
So I'm just wondering, and I did a little math also. If we were going to monetize that for the entire 36 trillion, that would put us at $132,000 gold. Is this even possible to get these valuations, or would it be some sort of combination of asset allocation and, talking about Bitcoin strategic reserves, somewhere in the 2030s? It's going to go to 13 million full valuation. Michael Saylor talking about that all the time. He's talking also, it's never too late to buy real estate in Manhattan. 1600, 1700, 1800. You're never too late to buy real estate in Manhattan. Same thing with BTC. But we need 1.3 million Bitcoin at 13 million to take half of that 36. That'll bring us to about 18 trillion. So, I mean, with this asset allocation here, I mean, what's the possibility of monetizing any of these assets to get us to wipe the debt
Yeah.
and then start us over back? But then, where does that take us then? If we wipe that debt completely clean, where does that money go?
The
I
problem
mean,
with because wiping debt was means we would sell, I guess. I don't know.
yeah,
I don't see how selling gold, really gold and land is really the only two assets that we own as a country. So I don't think it's the best strategy to sell the one asset that continues to go up in value. I actually think it could go in the opposite direction. I think he should buy more gold. I think that if you really wanted to send a message to the world, and actually President Trump made an offer to Zelensky in the Ukraine to buy their rare earth metals. I think the more of these assets we own, the stronger our dollar looks. And I think if he continues to make significant cuts with Doge and cuts jobs, there are assets that people will want to buy. The assets that they're obviously going to dump is a lot of the office real estate all across the country that they're going to do. I think that they will end up selling some of the land and into cities. There's a lot of cities that actually they need to build more. They need more homes. They need more infrastructure. It'd be a great way to stimulate is to open things up and allow people to build in certain areas that actually have demand for these things. But the biggest message that he could send is acquiring more gold would send the biggest message that we have is that we're a strong country, that we're continuing to buy assets. We're going to control these assets. We want to be like maybe not directly backing our dollar by gold, but sort of indirectly backing our dollar by gold. And I don't think it would be a strong strategy to dump gold in this kind of environment. I think that we'd be looking at, and I think you can't have all of it in Bitcoin either because Bitcoin is too volatile. So I think you have to look at what's going to give you the most stability in the market. So I think he's sending a message to Zelensky by trying to buy the rare earth metals. He mentioned trying to buy Greenland. I mean, he's trying to buy assets. So eventually it's going to come around. I think it happens this year. There will be discussion about buying more gold. And you know, the U.S. Mint has a tremendous amount of gold that they're minting right now. Maybe he just stops minting and just keeps it in reserve for the short term, just to help boost the value to our balance sheet, to make us look stronger as a country. These would be things that would be helpful in the long term for us. I think just the idea that I think the best thing he's done so far is making significant cuts, and his making a lot of the deals that he's looking to make, and continuing to strengthen ourselves trade wise. That's long term the best thing that he can do. Now, short term, tariffs, a lot of the deals that he's making, moving migrants out, all of these things will cost us more money in the short term. But I hope in the long term that these strategies will be good and they will help us in the end. But in the short term, tariffs, moving migrants out that do jobs that are we're paying pretty low, which means employers are going to have to pay more to get those jobs filled. All of these things in the short term lead to inflation, and they do lead us to in a position where things are going to cost more in the temporary. Because obviously, when you end up doing a tariff with any country, the consumer in that country ends up paying for that tariff. So these are things to keep in mind, is that it's a good idea because it circulates more money in your country, more tax revenue, more income, more jobs. But in the short term, it does create inflation. It does bring the cost of things up. So that is something to keep in mind.
Yeah, so sounds like tech money's moving into assets, and instead of the new golden era, if we could just move that one word, the new asset era.
The new
So
asset.
am I tracking that correctly? It
Yeah.
seems like
Yeah.
an enormous amount is going to move straight over into assets, and this will be the era of assets.
Yep. It's absolutely. And it's like what you said, it's what's been happening for, it's been happening for a long time. I mean, these wealthy families, the Rothschilds and all these families, they've always acquired assets. They've always bought, things that, it seemed unbelievable, art, all these things that just didn't make sense. They're buying these paintings that whatever these, I can't, why are they spending $5 million on a painting? And then 10 years later, they're selling it for 50 million. It's like they understand that there's a finite amount of certain assets, and they're always going to diversify into them. And that's how they protect their wealth.
And that's a clue to everybody out there how you can protect your wealth as well. So, Colin, I was wondering if you had any last thoughts while we sign off here. We've been going for quite a while, and a lot of people, deep into the discussion. The number one way to protect yourself, but we've already kind of covered that for the asset base there. I mean,
Yeah.
anything that we haven't covered that you think might be relevant?
I just think education is the key. We provide so much
Yeah.
education at Noble Gold. My book, from all the guides, we, contact us, learn about what we do, learn about the products that we're selling, why people are buying them today, why, these huge institutions are actually buying the real thing. I remember for years and years, people say, why do you want to buy the real thing? You just buy it on the exchange. And it was like, well, maybe they don't have all those ounces. And now it's coming to fruition that they don't. So give us a call, mention that you heard us here, and talk to a live person, a real person here in the US that does this every day. And I think you'll be surprised when you look at the charts, you look at the graphs. I think you'll be surprised at what you see. And hopefully this was educational and people learned. And listen, if you call us, you get education, you learn. It's not for you, great. But I think you're going to like what you hear. I think you're going to like who you talk to. Everyone's friendly. They all own gold and silver, the real thing. So give us a call. We're the experts in this arena, and hopefully we can help you out.
And I'll drop that link in the description box below. And if we look at I went to usdebtclock.org, and currently there's 367 ounces on paper contracts versus every physical ounce that's out there. And again, it's all about the fizz right here too, because I wouldn't be talking to you if I didn't also, I got the Maple Leaves here, I got the Britannias, and of course our favorite Liberties here. So again, different areas on the planet, but everybody takes gold and silver. It's sellable anywhere. And that's the whole thing. You could walk out with a pocket. And I'm going to say one last thing. In a super emergency, whatever form that would take, we've seen it through history routinely, whether a volcano goes off or whether a neighbor invades, or there's a multitude of things that could make you flee your area. A pocket full of gold, a briefcase full, or a backpack, I should say, and you're walking away with hundreds of thousands of dollars, tens of thousands of dollars just in your pocket that easily. And the thing about it is, anywhere on the planet is convertible. Anywhere.
Right. Yep. Absolutely. As long as you buy the bullion, as long as you buy it from a reputable dealer, you get the right stuff, you do the right thing. Like what we do, we focus on bullion coins and bars. It's liquid anywhere in the world. You can sell it anywhere. Then believe me, they want it. So
Can you hold up that kilo bar for me? And I see right there. All right, dream big, dream big. Here we go. Put that on your Christmas wish list. Colin, I appreciate your time today. Thanks so much.
Thanks, Dave. Appreciate it.
All right, bye for now.